Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Monday. I like Mondays because the stock market's back open, right? What's the market doing today? Well, we're having an update. Dow's up about 300. NASDAQ's up about 200. We're in a rally mode. Now, this market has been in a trading range, what I would call a trading range. It's been, for the last 3 months, it's been in a trading range between 4,100 on the S&P and about 3,800. So in between that range, it stayed there for, well, the last 3 months. Now, it's going to break one direction or the other. Now, most of you know I'm betting that it's going to break in the downward direction, but it's back above 4,000 again. But I think we're going to break below the 3,800 level. Now, I'd like to see it get up to 4,100. That would be what's called a triple top. Where you have a triple top, that would be a perfect place to short it. But I don't think we're going to get there. Maybe we do. Maybe we get to that 4,100. But I'm putting some short positions on here. My take on the market is we're going to go lower. Now, you may have a completely different take. A lot of people think this is a new bull market. I completely disagree with that. But now, if it goes above 4,100, well, I will be pulling a lot of my short positions off because maybe they're right. But I'm willing to bet that we're going to go below 3,800 and we're going to head downward from there. And we'll probably get down to the 3,400 range on the S&P. All right, that's my take on the market. Yours could be completely different. Let's get over to the housing market. The housing market is, well, I like to read articles over the weekend. I always like to read the articles because, frankly, I find them entertaining. I find them humorous. I find them funny. Look, a lot of this narrative that the mainstream media is pushing is that we're either at a bottom in the housing market or we're very close to a bottom. So now's a great time to buy. Now, this is what realtors would tell you. And the mainstream media likes to interview these realtors, and that's the take they have. Now, some economists, they think we're going to bottom out in the first half of 2023 in the housing market, and then we're going to rally back to new highs. Now, I don't think this could be farther from the truth. I think the housing crash is starting to melt down, and it's melting down at the fastest pace in recorded history. That's right, we're falling at the fastest rate ever. Now, if you look back to 2022, home sales were off 34%. 34%, they fell. They dropped in 1 year, 34% off. Now, that's also the biggest drop on record. So this fact that they're saying we're at the bottom now, that we're going to be bottoming out in the first half of this year, I just think it's completely wrong. But this is what the articles are pushing. They're pushing this mainstream narrative. The housing market's going to bottom here. They're trying to reinstate the FOMO into the buyers again, right? They want the buyers back in the marketplace. Now, here's what there's going on. I want to talk a little bit about this. It's called the 2-1 mortgage rate buy down. 2-1 mortgage rate buy down. Now, a lot of people don't know what that means. It could be a 3-2-1. But what it means is that they're buying the mortgage rate down for the first 2 years, all right? So, for example, let's just say we have 6% interest rates right now on mortgages. All right. So a 2-1 mortgage buy down would mean you go get a loan, and the first year, your mortgage payment's only going to be 4%, right? The second year is going to jump to 5%, and the third year, then it'll be 6%, and it'll be 6% continuing on from there. It's called a 2-1 mortgage rate buy down. This is becoming more and more popular to get the buyers back into the marketplace. Now, personally, I wouldn't fall for this, but the realtor will come to you and they'll say, hey, look, it's a great time to buy. House prices are already down 10%, and they can show you the statistic. Oh, yeah, they're down 10%. But interest rates are up. Well, let's do a 2-1 buy down. And it's just, it's just kind of some finagling going on. A 2-1 buy down, what's that? Well, we're going to buy that rate down for the first 2 years. Well, do I have to pay for that? No, we're going to get the seller to pay for that. That's what the realtor will tell you. Now, really, you could buy this down yourself. You could go into any mortgage broker, and it's called points. You will be paying more points. To buy this down may cost you 5, may cost you 10 points. Now, 1 point equals 1% of the loan. $100,000 loan, 1 point, $100,000. $1 million loan, 1 point is $10,000. But they're going to charge you many points to buy this rate down. It's called a 2-1 mortgage rate buy down. And it's very common right now, but I don't think it's a good idea. Now, maybe it extends the pain a little bit longer, right? It's like kicking the can down the road. If we can get these buyers to come back in, and then the buyers, they get this FOMO going because, oh, people are starting to buy again. I better get in there. Hey, they got this 2-1 mortgage rate buy down. Jump right in because the rates are down 10%. Now, they suck. In the article I was reading, I don't know who was the sucker. The sucker was this buyer. I think the name was Raymond or something. But anyways, what they said was just shocking to me. So here was how the buyer's mentality, right? So well, the house price is down 10%, and the seller offered us this 2-1 mortgage rate buy down. And we figure that we can refi within a couple of years, and worst case scenario, if we don't, our salaries will catch up. Okay, now this is a 28-year-old person, so I'm not going to be down on him too much, but obviously been around the block. Now you take someone like me, well into their 60s, and I'll tell you how this is going to work out for them. Look they're telling you that you can refinance within the next couple of years because you have that 2-year buy down, 4% first year, 5% the second year, and then just go refinance. Rates will be back down by then. Now maybe they will, maybe they won't. But one thing that's going to be back down by then is the price of the house. The price of the house is not bottoming out here. It is continuing the downward spiral. It's going to go lower and lower. Now, what happens when the house or the price goes down? Well, guess what? You cannot refinance because you have negative equity. Now, you put 10% down on that $1 million house. So you go, Mike, I got plenty of equity. I got $100,000 in. Well, that $1 million house 2 years from now, it's going to be worth about $800,000. So you would have to bring another $100,000 just to the table just to get back to even level, right? Okay, so that would just be back to even. You still wouldn't have any equity in the property. So if you want equity, you'd have to bring another $200,000 to the table. I don't know if they understand this. They're young people, and I'm sure they're very nice people because they listen to their realtor, and they're jumping in with this 2-1 mortgage rate buy down. But they say, even if we can't refinance, even if our house drops down, we love the house, so it's really not going to matter. It's really not going to matter because we have jobs, and our salaries will catch up because we get a raise every year. Oh, man, people just don't understand what is coming. They really don't. I mean, this is their first rodeo. This is not my first rodeo. You probably have figured that out by now. But anyways, what's coming in this thing called the recession, right? Now, they have jobs now, and they're expecting raises to make up for their 2-1 mortgage rate buy down. They're expecting to get raises so that it's all going to be okay. Well, they're going to be lucky to have jobs 2 years from now. Look at the layoffs are every day. More companies are laying off. Not just laying off, they're laying off 10% of the workforce. And it's going to get scary out there. Now, you can tell me all day long, we're not in a recession, but I can tell you, just read the Yahoo Finance. Just go on there today. They'll tell you who's laying people off. Every company's starting to lay people off because what do they see? Well, they see exactly what's happening. They see the recession coming. So the fact that your salaries are going to catch up, you're not going to be getting a raise. You probably won't even have a job. It's called a layoff. So how are you going to make your mortgage payment then? Well, you're not. And that's going to be what's called forced selling. You see, a lot of people are going to be forced into the marketplace. Now, right now, I agree. Like sellers, they're just stubborn. Now, I don't want to use the word stupid, but a lot of them are stupid because they don't want to sell unless they get that price that Billy Bob got. Now, I agree with everybody that's saying, hey, Mike, I don't see a crash yet. We're only down 10%. Look, houses don't just go down 50% overnight. Now, it'd be nice if they did. We'd get to the bottom. We'd start over, and we'd start building we'd have some price discovery. But it takes time to go down. Now, the sellers, they're saying, I'm not going to sell at this 10% off stuff. I want what Billy Bob got. But what Billy Bob got, that's already gone. But these sellers, sellers will sell. I promise you they will sell. It's called forced selling. When they lose their job, the recession will put pressure on them. They will be in a recession where they can't find a new job, and they will be trying to make these mortgage payments. Now, maybe the government lets them go on this thing called forbearance again, which is really unconstitutional, but that's a whole nother video for that. But okay, so maybe they extend it down the road. But believe me, when this plays out, house prices will be 50% off from the high. Now, we're already down 10%, so I'm only calling for 40% more. And look, this bullish sentiment that's being pushed down your throats, I don't believe it. I don't believe it. Now, look, the one person in the comments, they asked me about lowball offers. Mike, should I put a lowball offer in? Well, if you have to buy something right now, I wouldn't be offering the price they're asking. I'd be offering at least 20% below that price. And if they counter you, I just walk away. You put 5 offers out like that, you'll probably find someone that takes your offer. Now, the best way to put in a lowball offer, okay, here's a little secret, right? You find a property that's been sitting vacant for, well, let's just say it's been on the market for longer than 60 days, but it's a vacant property. See, vacant properties have a lot of bills. First of all, if your house is vacant for 60 days, your insurance company is going to cancel you. You think that's a motivated seller? Yes, that is a motivated seller. They're going to want out of that house. They have to pay for all the expenses of that house, the property taxes, the insurance, the upkeep, everything. They have to still have the bills, but the house has been sitting vacant for 60 days. Yes, go try a lowball offer, minimum 20% off, and they will probably consider that. But if you're even better, wait a year and then come with the lowball offers, because there's going to be so many desperate sellers when this recession hits, when this plays out, when the downward spiral finally does get close to the bottom. Not like what the economists are telling you now, that we're going to bottom out in the first half of this year. I don't see it that way. I mean, we're crashing pretty hard. We're crashing still at the fastest rate on record, and I don't see that just coming to a standstill just because they come up with this 2-1 mortgage rate buy down programs. Yeah, the lenders are pushing these. You know why? Well, the lenders are desperate also. They go, we got to figure something out quick, man. Otherwise, I'm not going to be able to make my house payment. I'm a real estate broker. I do mortgages also, but that's a whole nother story. But okay, but these people, they're desperate, right? They don't have any clients and they have bills, because what do real estate agents and mortgage brokers do? Well, most of them live well beyond their means because they like to present that lifestyle that they're very successful. And that does bring in more business when you appear successful. If you appear like you're poor and yet you failed, it doesn't get you a lot of business. So you want to look like you're successful, right? So what they do is they live beyond their means, and they're the number one bankruptcy clients right now. But they're desperate, so they come up with this 2-1 mortgage rate buy down to get the buyers back into the game. And then the buyers, once again, they're going to be the bag holders. And I feel sorry for them, because, you know, these young people, they're just misinformed. Look we figure we can refinance within a couple of years. Well, you figured wrong. Prices are going to be down. You're going to have negative equity. Oh, that doesn't matter. We figure our salaries will catch up with it. They're not going to catch up. You might be out of a job. Look, I feel sorry for them, but, you know, it's their choice. And if they want to be the bag holder, somebody's got to do it. Anyways, I hope I didn't depress anybody. I'm Tall Mike. It's Monday, everybody. Get out there. But first, give me the thumbs up. Hit the subscribe button. A lot of stuff going on this week. I want to talk with you again real soon. Bye-bye now.